I didn't think that Jay Powell trying to be Paul Volcker, that wasn't on my bingo card. I thought the Fed would tighten. I didn't think they'd tighten so fast that they would throw everything into a tizzy in the sound money camp. Muhammad El-Arian used the term, I just love it, where he said the Fed hit the brakes and the economy is going through the windshield. And I think that's about what's happening right now. And obviously it just hammered, everything in the gold space, particularly on the more speculative side. The producers and the large indices, this is the kind of time we're in a downturn. This is the value of having GDX, right? I mean, the producers that are generating cash flow don't get hit nearly as hard as the development stories and the drill stories. And as you and I both know, we've lost a few of those. We had, I made a big mistake with Arcana. It didn't make it. And there have been a few others that have gone down. Fortunately, I dodged Pure and I dodged a few of the other losses. What was the one we were talking about? Core. And so we've got stocks that are, I think, pretty good situations, but they're down 60% off their high. I blend my portfolio to be a mixture of probably 30-40% producers that generate cash. So, that gives me some stability. They're not going to go up 20x, but they don't go down as far either. And then I add, development and drill stories to try and get alpha. And obviously the development drill story piece of the market, with a few exceptions, has been pretty tough. And that leaves my fund down kind of mid 30s this year. So year to date, which kind of sucks. But as we all know, the operating leverage and torque in these things is really substantial. And, I've got good companies selling at low multiples of cash flow, low multiples of the gold that they have in the ground. And, I've got many, many, many situations that I'm absolutely confident with a turn in the gold price, a breakout above 2,000, or convincingly above 2,000, will, double, triple, or quadruple. So, a 35% drawdown, I think can be matched by, one of these next couple of years is going to be up 100. In 2019, we're up 97. In 2020, we're up 122. So sadly, it's the nature of this game that it's really volatile. And, you got to be willing to, take the drawdowns in order to be there when it moves and goes to the upside, because as you and I both know, it can go pretty quickly. And, people say, well, I'm going to wait till it turns and then I'll jump in. Well, that's not a bad strategy. It can work, but you're going to miss the first 20 or 30% because that can happen in a matter of days. So, it's been a hard year, but I'm unconcerned about the longer term outlook for this asset category. I think we're on the cusp of a very, very big bull market. I think what happened in the FANGs and a lot of other things, it's our turn now. As the regular stock market continues to fade, as inflation becomes more embedded, as the bond market looks less attractive, and as the Fed is inevitably forced into pivoting as a result of, not wanting to have another Great Depression, sound money, gold, silver, are going to perform extremely well, are going to perform well. And when they break out above their all-time high, particularly gold, it touched 1900 in 2011, it touched 2050 in 2020, and touched 2070 earlier this year, much earlier in 2022. So that's three tops there. When gold goes through 2070 with authority, it's going to be game on for all this stuff. And I think it's going to do that. And the reason I think it's going to do that is it's going to become the safe haven bid when other things are not working and inflation is not seen as being something that's going to go away. I think the mistake that generalists in the market are now making, and the derivatives and other people's things show this, is that they think we'll have a return to 2 or 3% inflation. And I don't think that's likely. Is inflation coming down? Sure, of course it's going to come down. They're killing demand. They're trying to, hammer the economy, but it's not going back to 2 or 3. And so if that's not going to happen, interest rates are going to stay high. If interest rates are high, multiples come in on the stock market. People look at what's working, and it's going to be our stuff that's working. And so, and our area is a small area. As total capital in the gold mining space is maybe $1 trillion. And there's about 450 trillion of financial assets in the world. So if any part of that 450 gets really concerned about inflation and wants to have a stock allocation to something that protects you against inflation, and it comes after our stuff's going up. So that's kind of the thesis. So, what's hard is we got to be patient. I mean, it should have happened by now. It hasn't. I kind of see it unfolding early to mid next year. I look at the timing of these financial changes, and I recall very clearly in 2007, Bear Stearns had a couple of funds that blew up that were in the housing space. They were doing CDS stuff, and they went to zero instantly in July. Well, okay, that was a signal, but the GFC didn't happen until October of '08, so it was over a year and 3 or 4 months later. If you kind of consider that the start of this cycle on the tightening was in February of this year, 2022, Powell started to hike rates. You kind of got maybe a year and a half from that. So maybe we're talking second half of next year. I think it might happen sooner, but it's coming, and there are signals of it. You can see what happened in England with the gilt and the pound. That was a signal. Blackstone just gating their real estate fund. That's a signal. Japan this morning increasing the target on their yield curve control. That's a signal. The things are breaking, and they're going to break more substantially in 2023, and that's going to be good for our stuff. And as I'm sure you know, and most of the listeners probably know, go look at the gold and silver charts. They actually look fantastic. I mean, they've done, they not looking back the last 2 years, but they've come kind of consistently down, really gotten washed out, really gotten sold out, kind of a nice rounded bottom, and we're starting to turn up again. So, I think it's because gold and silver smell the next round of monetary debasement that will come in 2023.